During the week, Nigeria's President Muhammadu Buhari signed the 2023 Appropriation Bill, the budget, into law. The 21.8 budget is benchmarked against crude oil production of 1.69 million barrels a day and a crude oil price of $75 per barrel. Budgeted revenues and expenditures are 10.4 trillion and 21.8 trillion respectively, while the total budget deficit is estimated at well over 10 trillion naira. The budget deficit will be financed, according to the government, by borrowings from domestic sources, foreign sources, multilateral and bilateral loans and drawdowns, and privatization proceeds. The assent of the president to the budget comes on the heels of the IMF predicting that a third of the world's economies will probably go into recession in 2023. Well, what are the implications of this for Nigeria, and how will the country fare over the next few months? Joining me again on the show to discuss the budget outlook for 2023 is Bismarck, Rewane, who I've had with me since the start of the show. So, back to the big talk of town, the budget. What for you are the major highlights?
First of all, let's call a spade a spade. It's a budget for 12 months, being crafted and presented and signed by a team that is going out. So the reality is that 12 weeks from today, there'll be a new sheriff in town, right? The moment the elections are done, whoever wins will have a transition committee. Nobody's going to be talking to the guys who drafted this budget, right? To all intents and purposes, that part is over. So you're going to be talking to the transition committee who are taking stock, who are going to be putting people in their various, knowing who is going to man what and who is going to run it. So essentially, you have a 52-week nominal budget for a 12-week effectiveness, right? And then you have the swearing in on May 29 and you have the teams in place. So let's call a spade a spade. That's what it is. But okay, having said that, you must have a budget. It's statutorily required. So we have 21 trillion naira, okay, to spend. But the budget has 5 essential components. Every time you have a budget, just ask yourself those 5 questions. How much are we trying to spend? We're going to spend 21.8 trillion naira. How much are we going to earn? We're going to earn essentially 10.5 trillion naira. The gap is 11 trillion naira. How are we going to fund it?
That gap?
Okay, so you talk about multilaterals. The budget deficit has to be funded with revenue anticipation activity, bills that are issued and all of that, debt, and a combination of other factors. But the most important element of a budget is the budget as a tool of economic management. So you got to go back and ask yourself, over the past 5, 6, 10 years, every time we said we are budgeting, we said we'll have inflation at 9 or 10%, but inflation comes out at 17, 18. The gap between anticipated inflation and actual inflation is wide. We said we're going to have growth of 4 or 5%. Actual growth comes in at about 1 or 1.5%. There's that gap, right? So as a tool of economic management. We also say that we are going to have an impact on unemployment and so many other variables. It doesn't happen. So let's step back a little bit and ask ourselves, the most important objective of a budget is to use as a tool of economic management so that you can achieve macroeconomic stability and achieve growth, improve the quality of life of your citizens over time. But history has not shown us that we've been able to achieve this.
Yeah, and in fact, with regards to the remaining length of time in office of this administration, it does raise concerns as to what relevance this budget will actually have in the next few months. But speaking of a tool for economic management, one of the concerns on many people's lips is the debt overload that Nigeria currently has, which could actually be a major negative legacy for the incoming administration.
Well,
where can we even start from? We're clearly spending more than we're receiving in terms of receipts. Is Nigeria going to restructure its debt?
You must. You have no choice.
But the finance minister has said several times that that's not going to happen.
The finance minister, with all due respect, is doing her job and saying what should be said. The job of the finance minister or the central bank governor is not to cause panic and chaos. But the reality is that this is a 12-week game. After 12 weeks, nobody's going to look in that direction. The reality is that it is not just the debt levels at even 35% of GDP is not staggering compared to other. But the reality is that if it was 10% of GDP 10 years ago and it's now 35%, the trend shows that you are growing your debt at levels which could be unsustainable. One. Two, what have you done with the debt? Debt are liabilities. Then you have to look at the asset side of the balance sheet and say, what has Nigeria achieved with the debt that it has accumulated, both domestic and international? One, labor productivity is flat and negative. Total factor productivity, which is the test for the optimal use of capital stock in the country, is 0.7%. It was even negative before then. So it shows really that from an economic evaluation, economic policy and impact analysis, that the economy has not done that well. In fact, it's suboptimal, to put it mildly.
Yeah.
And therefore, what happens normally is that you, first of all, you go like a prodigal son, you finish the food, you sell your father's wealth, then you go borrowing, and then you come back home. So the reality, why I'm saying that you must restructure your debt, you must go to your creditors and ask for forbearance so that you can now begin to grow, is that Nigeria has become a prodigal economy, which means that we now need to go back to the basics and do the right things and stop doing the dumb things.
And obviously you mentioned this whole issue around the quality of spend, but there's two things I want to say here, two key pieces of legislation: the Fiscal Responsibility Bill. Now, looking at where we are in terms of debt to GDP ratios and some of the targets we're mentioning, is it that that Responsibility Act is now not in keeping with current economic realities, or is it a question of economic management? That's the first. And then the second thing is the issue around CBN advances to the federal government. This again boils down to economic management. And what can you expect a new administration to do with regards to the violations or purported violations of those key pieces of legislation?
So you raised two issues. One is economic management. The other one is legality.
Yes.
It is illegal for, you're allowed, maximum you're allowed is 5% of previous year's revenues. And if you are doing 100 times or 1,000 times that, it becomes a level of worry, right? So first of all, you've got to correct that. So that's why the old securitization, a program for securitization. But what is interesting though is that for 1 year paper, the federal government of Nigeria risk for 1 year paper is 13%, right? But the federal government is saying for 40 years, 9%. Okay. No, even an economic masochist is not going to go into that kind of. So, one. Two, the entire magnitude of it, 24 trillion naira. Total pension fund assets in this country, including in all asset classes, about 14 trillion. Yeah. So even if you said, okay, we raid the entire pension funds and put them there, you're still short by 50%. So what do we need to do? We need to sit back and have a program and say that we're going to release these instruments into the market, but also to stop that level of violation of extant laws, right? It's improper for that to have happened, but we are where we are, so we accept that for what it is, and now we come with a program on how to correct it, but also to ensure that we don't slip into that level of violation of our own laws and rules.
Absolutely. And one of the things we need to look at, assuming all things being equal, that somehow miraculously we restructured this debt, we're on a stable economic footing, there's a question of our longer term strategy as a country around revenue generation. And one of the clamors we're seeing for certain industries, for instance, if you look at oil and gas, there's been, apart from the removal of the subsidy, which would help ease some of the burden on the government, is the incorporation of the JVs, the upstream oil and gas JVs, helping as well to reduce the cash call obligations of the government. What are your thoughts on those two particular points?
You see, this economy revolves around two main factors, petroleum and finance. We've talked about finance and how to ensure the kind of macroeconomic stability. And you talked about how, we had violated our laws and all that. And after you restructure it, the question of the moral hazard, that if you have done it and got away with it, maybe you're going to do it again as a country. I don't think that your creditors are going to allow you. The covenants that we put there will not allow you to do that. Now, it now brings you why the solution to it is that you've got to solve the structural problems. Part of the structural problem is the oil and gas initiatives that you have. So you have, right now you have unincorporated joint ventures where cash calls and everybody comes and the money from the cash call goes into a subsidy pool, which the central bank uses to subsidize imports of petroleum products. So it becomes a vicious cycle of poverty and criminality. Now, so you have that unincorporated joint venture, the cash calls come, the federal government defaults on its own, the money is used by the central bank to subsidize the importation of refined products, the refineries don't work, and it just becomes a perpetual, it's a race to the bottom. Now, by incorporating the joint ventures and stopping the cash call, it has some implication. The good side of it is that there's no need for cash calls. There's no need, the companies will raise the money just like LNG. However, those monies that were coming in, that were being used to subsidize, those subsidies will disappear. So if on one hand you stop the subsidies, second hand, you now you now incorporate the joint ventures and the cash calls are not coming in. What you are going to have is a foreign exchange market, which is primarily driven by the private sector.
Yes.
All right? And the central bank will just be participating as part of the interbank market, and also its role as just being the custodian of funds. And then the exchange rate determining mechanism become much more efficient, and you'll have that pool of funds, and you'll have a market that is driven. That is the ideal.
Scenario.
But the way there are serious bottlenecks and substantial enlightened self-interest, significant interest that will fight it. It's not going to happen
And of
overnight.
course, it would impact remittances to the FAC.
Oh yes, definitely. Yes. But because your subsidies have gone down, so the outflows from the FAC will be lower.
Yes.
But then the inflows, but what's happening? The inflows don't go to the government; they come to the economy as a whole.
Absolutely.
And there'll be growth, and from growth, you come back to that revenue situation. Why is revenue declining? Because growth is being stalled. You can only tax profits. You can't tax losses. So those companies that were essentially making losses because of bottlenecks and all sorts of things. So you find that even though your economy seems to be growing, or your budget is growing by 1% or something, you are unable to extract that much from these companies that have been bled to death by bureaucracy, by extortion, by all sorts of things, and lack of infrastructure.
I mean, it's quite a potpourri of potential challenges. I want us to maybe just look very quickly. The president hasn't obviously ascended yet to the finance bill, but part of the idea behind the finance...
I think he has ascended.
Oh, he has?
Yeah.
Okay, well, part of the idea is that the Finance Act is really meant to support the budget goals. And I was wondering whether you could give us some view on whether Nigeria has got the balance right with regards to its taxation policy, its revenue administration going forward. There's talk of plugging a $500 billion gap from maritime fees and the spectrum licenses. How will this impact the economy and industry, do you think?
Well, those are one-off things. If you sell the spectrum license, right, you get your $500 million for the auction. But then the next time you get it is when there's a renewal of those licenses. So your life cannot depend on one-offs. You must have a regular flow and pattern. The stock of wealth and the flow of wealth are two different things. There's a lot of emphasis, if you bring back stolen money. When you will finish the stolen money just the way it was there before it was stolen,
yes.
Right? So I don't see that as a solution to the problem. The solution to the problem is come up with a structure that is sustainable and that actually stops these perpetual parasites. These special interests in Nigeria are an equivalent of fibroids in a pregnant woman. The fibroid must eat first before the fetus will eat. These guys who are the special groups of vandals here, and all sorts of oligarchs here, these guys are super fibroids. And so even if it's only $1 billion that comes to the economy, they will grab and leave the patient, that is the mother, which is Nigeria. Nigeria is typically countries are described as female or she. The country, Nigeria, is the one that is hosting both the fibroids and the fetus. But the fetus is getting smaller and the fibroid is getting bigger.
Very interesting analogy there, Mr. Rewane. So let's look at some of the structural issues around the economy. You know, in this budget, the government has said 22% of revenues coming from oil and 78% from non-oil. It sounds like, wow, we're a diversified economy, but you and I both know that the true definition of diversification is a lot more substantial. So in terms of the makeup of the economy and the areas we can really focus on to stimulate growth, what are your thoughts on what needs to happen?
Well, the economy is diversified in terms of activity, but not diversified in terms of revenue. So 70% of total revenue, export revenues, come from oil. Another 12 or 14% comes from gas, LNG, and then the rest comes from all other activity. So luckily you have the African Continental Free Trade Agreement coming up area. You have so many other initiatives. So Nigeria, like many developing countries that are faced with economic crisis of the past, structural problems that have carried over, special interests that are parasites on the system, has to do certain things. And they do it because they have no choice. We are not. The only reason why I'm optimistic that because Nigeria has no choice, we will restructure. Our creditors will give us terms. We will have no choice because the people are also hungry and they are angry and they're getting desperate. So when you put all of this together in an election year, you have no choice. No matter whoever has the misfortune of winning the election, will have his work cut out for him, and we'll have to come up with this policy. So I'm optimistic to that extent, and that anybody who is faced with creditor pressure as well as internal structural change they have to make will have to come to terms with all of these people. And then you have to tool yourself. What's going to happen after February 25th and March 11th is that the transition teams are going to say whoever wins is going to have to sit down and do its work, and who are the right people who can make this sacrifice, who can add value to their various economies, both at the federal and state level. Don't forget, we are talking about federal government budget. Federal government activity in total activity is maybe maximum 55%. The economies of all the 36 states put together with federal government, consider what's 100%. Even if you assume that Nigeria is still underperforming in terms of growth, when look at the South African economy, which has no oil, and look at how it has grown. And look at Ghana is actually declining because of its credit.
Defaulted on its debt.
Defaulted on its debt, and so it's time for us to stop playing ostrich and face the reality. The reality is that there are difficult days ahead, but the solutions are pretty obvious. And if you have a program to solve these problems, then the future looks very bright.
Absolutely.
Right? Especially for the young people.
Yeah. And you know, the IMF chief has talked about the global recession. Yes. And Nigeria wasn't listed in the
Actually, Nigeria is about 2.8% plus growth next year. That's projection.
So actually, relatively, you know, we're cautiously optimistic. But I want to look at some of the contagion effects and some of the risks on the horizon.
Yes.
Because even if we get our act together, and it will take a while for things to consolidate and stable, what do you see as the major global headwinds that might perhaps undermine our ability to maintain that level of macroeconomic stability that we seek?
I think the thing is just that most of the investments that are going to be coming in and new initiatives are going to be catalysts for growth, but also creates major displacement effects. Because technology, broadband, digital creates a lot of displacement for people who were beneficiaries of the old order. Okay, so somebody was saying this morning on one of the programs that in the past, when you come out of your hotel room, you had taxis waiting, you had drivers there, and everything. You come out now because of the hail ride, because of Uber and Bolt. Those guys are out there. What are they doing, right? What's the role of driver, and what has been done to retool the driver who knew nothing else but to do that? Now, what is he doing? Has he become a kidnapper? Has he become this? Has he become that? So the major challenge is that the restructuring of the economy, the new technical, but you need policymakers who can now invest heavily in those roads, rail, so that the construction people can move from providing services to actually working on those farms and the mechanization, the roads, the rail building, and all of that. So you don't have people. You have very rich people, but extremely few very rich people, and a lot of people who are just going to be dangerous because they are hopeless and they have no skills to live in the new dispensation. So that's the first thing. Secondly is the fact that the OPEC, we're using $75 a barrel as a budget benchmark. I think that's a bit optimistic, but...
Oh, really? This last year, the prices averaged, I think, 170, and we didn't really make the most of that.
Did you say last year?
Well,
I'm talking about next year and 2024. Electric vehicles. For every 25 electric vehicles made, one fossil fuel, normal vehicle was made. Right, and so we are now beginning to see, and so the relevance of OPEC, right? Growing the relevance of OPEC, the obsolescence of oil as we go, the transition to these other energies, renewable energies, I see that trend. So over in the long run, right, our largest export market is India. And the major product we sell to India is crude. India is the most aggressive country in terms of stopping the use of traditional vehicles. As a matter of 2030, by 2030, there will be nobody in India. We will not allowed to bring any other vehicle there or make any vehicle which is not electric. So what does that tell you? It tells you that you have to now begin to milk your golden goose, which is the oil now.
In this limited time. Yeah.
And use it, deploy it for things that have linkage effects.
Longer term.
And then you have to now go into those initiatives,
yes,
which will allow you be less dependent on oil, like tourism and things like that, our history, our culture.
Absolutely.
That becomes a real thing.
Wow, really fascinating discussion. We've covered so much ground, from governance to the macroeconomy to socioeconomic unrest and the future of the energy sector. Always fantastic speaking with you, Mr. Bismarck Rewane.
Thank you for having me.
Thanks
it's always a pleasure to
us.
share our thoughts with the viewers.